Most people in crypto don't lose because of bad trades. They lose because they become exit liquidity for smarter money. And right now, we've got a very interesting storm brewing. Between the Federal Reserve rate cuts, the Supercycle hype, and the downtrend that no one wants to admit just yet, retail, in my opinion, is going to get harvested more likely again. But funny enough, both ways. So let me show you what's going on and what's happening and how this could play out, because it could get very interesting. And if you like this sort of stuff, leave a like, means a lot, and more importantly, comment. What do you think? Do you believe in the Supercycle hype? Let's start with the obvious, the Federal Reserve and the policy. We knew a 25 basis point cut was incoming because it was obviously on the cards. But Mr. Powell was talking quite cautiously. And yes, we could talk about T-bills, we could talk about QE, but reality is that's not going to save everyone. So on the screen, as you can see here, Fed slashes interest rates, but issues mixed guidance. And yeah, you can talk about money go brr and all that kind of stuff, which is what retail want to hear. And I could talk about this quite a lot. Even in my recent videos, I said the ending of QT does not mean QE is going to happen. And it isn't a bullish trigger, it's just volatility potentially on the next coming weeks, hopefully. We do need volatility though, it's pretty boring. But yeah, you can see here, this is a situation we need to talk about more than anything. Attention will turn to liquidity, the federal balance sheet policy in early 2026. Now, yes, you could talk about this. QE, by the way, isn't going to happen. That is a massive factor in terms of why people get this wrong. QE is a metric and a measure of extreme caution when things are going wrong. Now, last week, I talked about this balance sheet in terms of dominance. Look at the characteristics of this, by the way, how 2008, 2009, when we had a bit of a financial crash, we went up. COVID, we went up, right? This is a metric for the obvious. Where does the money printer go live? And that's a thing. Volatility and breakage could equal this rising, but I don't see that just happening just yet. And that's what I mean. It kind of debunks the whole thing about the supercycle, which I will go on to in a minute. But the reality is here, the federal policy, yeah, Donald Trump wants to get more rate cuts. And yes, you could talk about what certain words were said during this speech. But right now, the acknowledgement is very, very simple. We haven't had big issues yet. I don't know, yet. But as you can see here, pressure, slashing rates, Trump. Is Trump going to be that bull in a china shop and he's going to break things? Possibly, yes. Tom Lee. He's richer than me, but he does say some silly things. But then again, he's got a point of interest. He has a situation where he says certain words. Now, I seen the quotes and it was, you may never want to sell. We might be going into a super cycle. The key words we and never sell. But let's look at some of the stuff that he has said recently. Now, this is kind of obvious. Now, as I say, I've been here before. I've seen it all before. I've seen these sort of things with the lengthening cycle. Now, some of the predictions, obviously, as you can see here, hitting some lofty numbers. That will probably not happen at any point in time, considering we're a couple of weeks away. Now, in 2021, this was the same thing. Hype, grind, bear flag, breakdown. Boom. Lengthening cycles. Everyone got destroyed on that. Never sell sounds wise until you're 50% underwater, right? Holding altcoins that will never revisit all-time highs, yeah? How bad has Ethereum done this cycle? Very bad. it's obvious, right? So when we talk about lengthening cycles and super cycles and the business cycle, there's lots of things happening. Yes, you can talk about poor performance of the crypto market in 2025. That's a fact, right? That's not, we're not beating around the bush. We've got all these situations such as government attitude shift, strategic Bitcoin reserve, the ETF success, only Bitcoin, by the way, traditional finance entry. Yeah, you can talk about that. Native product breakthrough. Yeah, you could, good stuff. But that hasn't reflected in price because the price is behavior of people, right? Candles are people, remember this. And you could talk about how the ETF has stemmed the flow and all that. Yeah, I get it. But the reality is nothing's really changed. But as you can see here, for long term, time tokenization. Yeah, there's a lot of dilution still, right? Geographic, tokenization as well. Yeah, you can talk about certain things. Financial statement. Yeah, I get it. But it's the same with any sort of market, right? You may like Coca-Cola to drink, but you may not want to buy the stock. It depends on what. This market is very, very different to the stock market. And this is what my biggest issue with a lot of these people are. As much as they are fund managers in other markets, They try and treat crypto like the stock market. It isn't the same thing. It works differently. There's a lot more nuances to it. There's a lot more shithousery as well. So it becomes a bit of an issue. So that's why certain performances or certain metrics don't happen, because teams sell and there's not enough liquidity to kind of, stem that flow. But the biggest problem we have currently, the TA reality check is we are in a downtrend. It's looking horrible, and no one is liking the fact that this is happening. The trend is still down. We have got heavy resistance where we are currently. Now, I would have argued the heavy resistance is 98 to 103,000, never mind bloody 90,000 to 94,000. Risking this in terms of we're going to go higher is quite speculative at the minute. It's very much gambling, because we are in a 2021 style complacency bounce, in my opinion, where we could actually go a lot lower. I've been quite bearish on Bitcoin in terms of we've already done a big move. We're probably going to correct. We're probably not done with this correction just yet. Until we reclaim that trend, until we get a change of character, every little pump could well be liquidity problems. So yeah, this is not a super cycle chart. This is, I need to be very patient chart. Now, I'm not disputing the fact that we probably will go higher longer term, but everyone's expecting by the end of the year, by 2026, we're going to be 300k Bitcoin, which I find unlikely unless something fundamentally within the policy or the whole behavior changes. And that's the thing, it's that whole psychological thing. We'll talk about the psychology in a minute. Too many people play the market they want to see, but not the market they have. That's an issue. And I talk about that quite a lot. By the way, if you want more videos from me, a Discord and courses and guides and tools and all kinds of resources, jump in Patreon. It's relatively cheap. So I want to talk a little bit about the psychology, because I think this is important. Now, trade levels, not stories. Everyone's looking at the rate cuts. Everyone's looking at, Supercycles and Tom Lee and Cathie Woods and Michael Saylor. But realistically, we are in a downtrend. We are looking pretty ugly. The volume's low. Every single kind of retracement up, we tend to, get sold into. And the thing is, you need to also be dynamic and not so much religious, and not have that belief that we're going to go to the moon straight away. Look lower down, look at those levels, and look at focusing on when you can buy at a better price versus I should buy now because I think we're going to go to the moon. If the data changes, yes, you change your bias with it. But realistically, that hasn't happened yet, has it? And be flexible. This isn't flip-flopping, by the way. It's just survival. I've openly said that I sold a lot of my Bitcoin higher up. I'm holding Bitcoin still. I've got stables if we go lower. And I'm not bothered if we go higher because I've still got Bitcoin. That's fine. I still win. If we go lower, I just buy more. It's not rocket science. And that's the thing. I'm playing for both sides, really. And try and avoid as well being a bit of a hero here, because I think everyone's looking at influencers and these sniper market entries and these YOLO kind of, let's go for it. But realistically, you're just going to get eaten alive, especially if you're in altcoin, especially if you're doing certain things with Bitcoin, because I think people don't have the patience for it. But you have to, unfortunately, manage your risk. This is a hard market. It's one of the hardest markets ever. There's a reason why not many people survive it. There's a reason why many people quit. Now, before I leave, I want to talk about one thing. The stable currency dominance here is still looking a bit weird. We're still quite high. That means that money's moved out of live assets into the stable currency market. That's fine. This needs to drop for any sort of liquidity to show its hand in terms of we're going to the moon sort of vibes. It's not as simple, as I say, to do that. So be careful with the trades. And what I will say is this. Blowfin has 20% off in terms of your fees. You get them back in your wallet. There will be a time to trade altcoins. There will be a time to buy altcoins. There will be a time to buy Bitcoin. It's okay standing still. There's a link here below. It's no KYC required. You can get it in the UK if you want to trade futures. And yeah, on Patreon, I will be talking more about trades when the time is right. Right now, it's not right. So just be mindful of that. So yeah, if you are sick of the Supercycle hopium and you want real analysis with real psychology, like the video and drop a comment, please. And obviously subscribe for more. But I'm hoping I give you a bit of perspective and a bit of realism here. So yeah, not ideal. And if you are caught in the trap of YouTubers, please do watch this video, like and subscribe and all that kind of good stuff, as I've been saying.